Hello, everyone. I hope that you've had a good trading week so far. I hope that you've been on the right side of the market, as you should be, as we have been, right? Most of our analysis, well, all of our analysis for the past Sunday has, been fruitful. So it's one of those weeks that are, decent, right? In front of me, you guys can see the interest rate triads, right? And again, before we begin, right, before you enter any trade, right, you need to at least take a look at the three main triads, right, which are comprised of the interest rate triads, the forex market triads, and the index futures triads. Here you guys can see that we had sequential SMT, right, between here, which was the previous quarter, right before Monday. So we ran out Thursday's high, right here, right here. I need to turn on the crosshairs for you guys, right? Right, and okay, so right here on Monday, right, Monday's opening, right? First we had SMT here, right, which was sequential, right? So Thursday ran out Wednesday's high, right here, as you guys can see, right? We're looking at the T-bond futures right now, and you don't need to really, have a in-depth understanding of what it is or what do they use it for or anything like that. You just need to know that the interest rate market controls the market, right? So interest rates control the market, and the interest rate triads controls interest rates, right? So everything in the world revolves around these markets right here, right? So here we had SMT, right? Sequential SMT. And what would you wait for after this? After seeing this, what do you need? You need a lower time frame cycle sequential SMT. So this occurred on the weekly cycle, right? And if you guys can remember, right, we highlighted these lows right here, these equal lows in this Sunday's past live stream, right? And you can see that we did have price, draw to those lows. And we were here, and as I've said before, right, when you are looking at the weekly cycle, you need to see a close above, right? So it's not just you want to see a wick, you want to see price trade above, then close above the previous quarter's high, forming sequential SMT. Price broke down, right? When we were here, right? When we, instigated, when we referred to these lows. And whenever I refer to a lower high, it's basically me saying to you that I expect price to go there, right? I did not go here and say there are highs above the market or anything like that, right? All I did was refer to these lows. And that is just a strategy, a way of me, trying to not give signals, but doing it at the same time, subconsciously, I guess. Why? This is due to the fact that I am aware that whenever I post charts or, say that I expect this to go here, there are people that take that and put it in their own groups, which, makes them look smart, which they are not. They're thieves, right? So for you to, be in line with the market, right, you literally need to follow the steps, which I give you the things that you need to look for, the stages per se that you need to look for, right? So this was obviously stage one, right? When price traded above and closed, then we had this occur right here, right? We had another sequential SMT occur here, right? Here you can see that price closed above this close right here, right? So this was the Asian session high, and this was the This was the London sessions high, right? So this was sequential SMT. Price did trade above this by, a few points, but we don't care about that. It's the closes that really matter to us, right? Here we had price close, below here, and here we had price close below here. So we had two sequential SMTs, right? Which was in sync with our bias, and then afterwards we just had expansion. So due to the fact that we were, already bearish on this, and we were bullish on the dollar, not the dollar, bullish on the, sorry about that, bullish on Euro USD, and bearish on the dollar, right? Due to the fact that the dollar moves in the opposite direction of these, right? Not the dollar, the Euro and GBP USD moves in the opposite directions. Yeah. So there are times when you will even see, right? You see the dollar, right, in sync with the futures markets, right? There are times when you will see the dollar in sync with the futures market. There are times when you will see everything out of sync except for the triads, right? Really and truly, the triads are what relates to one another, right? The triads relate to each other. So if you begin to compare the dollar to the NASDAQ, you'll get confused. If you begin to compare, for example, the pound to the interest market triads, you're going to get confused. The only thing that you should really be comparing with one another is, each asset within their own triad, right? What you should look for is, for expansion, is just SMT occurring around, the same time, right? So for example, here, which was, we had SMT here, right? We had SMT here, and we had SMT here, right? Once this, this was a ranging market, right? Which showed that we could expect movement here before this even happened, right? So here, right, this high right here was formed at the 28th, Thursday. We had expansion Monday. On Monday's price section, we had expansion as well, right? So this was all down price action, right? And at times, yes, this will, or each asset class will either drop more than the other, right? But that doesn't matter. It just matters that they're in tandem, right? They're moving together. So this dropped, right? Then this dropped, right? When this occurred, and right here we had SMT, right? So on Tuesday made the low of the week for the euro, and the British pound made the high of the week for the US dollar. So here, right, and we even had a lower time frame sequential SMT here as well. If you go down, in the lower time frame cycles, you'll see it. Then here we had expansion, as you guys can see, right? And this is where it gets, interesting. So here, right, you have Wednesday not taking out Tuesday's low. Same thing here. And this couldn't take out the high of the US dollar, right? Within the interest rate triads, right, you can see that we had price going up a bit, but they did take out Tuesday's low. As you guys can see, all of them did, right? And they even closed there too and then rallied. So why would this even rally? Why would it rally? Like there is no sequential SMT. There you say there must be sequential SMT for price to rally. So in occasions like this where there is no sequential SMT, right? You'll just see price pull back and just rally forward. It's due to things, like this. And this is why you need to understand the triads and how they relate to one another. Intermarket sequential SMT. Wow, someone just said it, right? So it's not just, okay, I can just look for, sequential SMT within this market. No, you can reference it, market to, each triad to each other as well. And this is something that no one will even, begin to, understand. It will be hard for them. They'll be that I can't be looking at all these at the same time. Why am I just need to look at one asset class. Then you're going to be less accurate. Right? That's what it's going to be. You're going to be less accurate. And also here, right? Remember we talked about, symmetrical highs or lows and unsymmetrical highs or lows being taken out, right? Here you guys can see that, right? This was not a swing low that was taken out. This, right? Look right here, this candle right here is a swing low, right? The candle to the left, higher than the one in the middle. The one to the right, higher than the one in the middle as well. And the same thing for here, right? So this took the liquidity below here, and this was real liquidity, right? And then there was intermarket sequential SMT, which is what caused price to rally, right? Each asset class reflects upon each other, and then above that you have each triad reflecting, on each other as well. Just taking information from each other. That's what actually causes, fluctuations in the marketplace. That's what causes every move in the marketplace. There is nothing other than that. It's time and it's price. There is no level that is there. The only reason why a level even holds is because there is SMT. Right? So you've learned what SMT is, which is the base. You've learned what sequential SMT is, which is elementary, and now this is intermarket sequential SMT. This will be impossible for someone new to understand, and you must practice. Do you understand? So this will make you even, more accurate. Yes, it will be a bit harder, and no, you don't need to focus on this right now if you can't. But it's just, me giving you what you want, right? It's always can you give me more? And I'm like, okay, of course I can. And still, this is, not, as high as a level is, as the level can be, right? Still, we're just, climbing up into, preschool, right? It's just, that's what it is. But look at the lows that were taken out, right? Remember, whenever you have a triad, each asset class must, right? If price is supposed to continue, right, there must be doing the same exact thing. Right here, if you just look, right, from afar, it seems that they all took this low. And as you can realize, it is specific lows. It's not just we just took this random low right here. No, it went for Tuesday's low. What was below Tuesday's low? Liquidity. Why? Why is there liquidity? This low, right, was formed different from this one. It's not random. It looks random. They made it so that we would believe that it's random, but it's not. Then what did we have here? In the US dollar, we had a higher low than this one. Here we had a higher low than this one. And here we had a lower low than this one. Right here, look at this, right? What do you have here? After this was established, so if you were looking at this and you would see this happen, then you'd realize that, oh, price did not break below this low here. wow, this must be bullish, right? And we already established the low of the week. And remember, this isn't hindsight. Remember what we said about the pound, right? We expected the pound to be the best, the better trade, right? And it was. Look at this, right? It ran this low, which we highlighted, right? And what happened after this low was ran out? What happened? Their SMT occurred, which is how liquidity is induced, right? Right here, what happened? What happened here? The pound traded in this fair value gap. What happened here? It did not. What is that? That's SMT fill. So price was, bound to go higher. If you're looking for everything that we talk about here, you'd see that. Are we relying upon any level at all? No. Do you understand that? We aren't looking at any level. It's just time. It's just time, highs and lows and imbalances. It's not, oh, let's go back and we're gonna mark out this fair value gap from this daily fair value gap from no. We don't need to do that. We don't need to. And what made, these lows important? What made them important? Now we're going to look at that. And we've, introduced this before. Right here. What do you see? Right? This was a lower low. This was a higher low. Right? This is where real liquidity is found, everyone, right? And then here you have a higher high. So this in itself would, seem like it was SMT, but due to the fact that, it was Friday and we were trading, Monday, and the pound was in a range, we need to see clear price action, a clear break below these lows, which were not symmetrical lows, right? These lows were, caused by SMT, and then price failed to go here. When price break below here, what did we see? We saw SMT, then SMT failed. Okay, now we can go higher, then price went higher. Then here, what happened? And we talked about this too, right? We had this candle break above this high. This one in the euro did not break above this high, right? So here, price didn't go above this high here, right? And whenever you're looking for actual, shifts of, market structure shifts, which are SMT market structure shifts, right? And it's just that name. Of course, I could give it a more difficult name, right? But there's no need for that. It's, we're not trying to make anything, harder than it already is. We're not trying to do that. Just trying to, make everything seem easy to understand. Right? So here, remember, right here, what happened? We had, the intermarket sequential SMT occurring. Then you had price push above this high. This one didn't. Okay, now that became what? Bullish. Right? That became bullish. And also what happened here? And here we had this low being taken out. And here, price failed to take this low out. Meanwhile, this was happening. Right? So we had the pound break below this low, dollar failed to do so, then the pound traded above this high. Remember I said that the pound would have the better trades, right? The pound traded above this high, right? the euro failed to do so. This was a shift. This was a real shift in sentiment. Then we had price expand, right? Which I believe occurred with the news. So again, right? SMT directs order flow. It doesn't matter what the news, right? Which news is being released. That does not matter. Doesn't matter at all. With CPI, doesn't matter. If it was CPI here and we had sequential SMT, what would we expect? Price to just continue in the direction that it has been, placed in. Right? Order flow would just expand. Right? There's nothing that's random about these markets. Right? Everything, follows this exact rule. Right? So the first thing was we studied each, asset class relating to each other. Now we're studying each triad relating to each other, right? There are more triads, right? There are some for, obviously oil, gold, not oil and gold, but, each of them have their own respective, section, which we will eventually get to, right? Crypto, of course, too, which relies upon higher time frame cycles, even real estate. But for now, we will stick to the main ones so no one gets too confused, right? If you are simplistic, right, you want to be simplistic in your analysis, right? You do not need to be looking at everything. If you want to trade bonds, you can just look at this. It's just that you would probably miss certain moves, like for example, this right here, right? Due to the fact that you would not be able to see that this was a crack in correlation on a broader spectrum, right? So literally, what you're learning, literally, specific lows at specific time, which is basically time, right? Time, liquidity sweeps, and gaps in a very simplistic way. And I think it's amazing. Right? I think it's actually amazing, right? Due to the fact that we could foresee price here, then we could, foresee that, an expansion here, which is what we said we would look for if price broke below this low, right? That's what it is. And then, right, we know that sequential, listen, do you realize that every time there's the higher the lower the week, what causes it? Sequential SMT. That's what causes it. It's literally there all the time. Like literally, that's what it is. It's not, oh, this order block here, or if you do know that this was SMT, you just like say, oh, price traded into this fair value gap. It doesn't matter. It's highs and lows, specific closures of price and so on, right? Here you can see that, right? Even if we, didn't have the wicks, we had this price closing below this price right here, whereas we had this price closing above this one, right? It's the closures, right? That's what the algorithm sees until, right, you get to market structure shifts, right, which are not used. This is not reversal, right? This is price hinting to you that it wants to go higher after the order flow has already been established, right? And there are times, right, when, and you should listen right now because this is important, right? You will have sequential SMT, right? And this can occur between any quarter, as you already know, including Friday. So it could even occur between Friday and Monday, right? So here we have price trading below this low, right? But what else is important right here? When did this low form? This low was formed when? Remember, nothing in price is random, and take everything into consideration, right? When was this low formed? This low was formed in the New York session, and this one was formed in the what? This one was formed in the London session. So here, right, when you have a higher time frame sequential SMT, right, there are times when the lower time frame sequential SMT will be mirrored across, different quarters. So regularly, right, you would see sequential SMT, between Q2 and Q3, right? Here, right, this is Q3 and this is Q2. It's just mirrored and, placed, positioned within a higher time frame cycle sequential SMT, right? So there are times when, you will even see, this low being formed here at, during the London session. And then you have this low come here, within the Asian session expand. Or you have this low form right here, right? It would be, within the fourth quarter. Then this one would take that low out while completing a higher time frame sequential SMT here in the New York session, right? So it would, look something like this, right? So like here you have, right, this responding to this. Why? Because there's a higher time frame sequential SMT, right? So you can get more, in tuned. And there are times when you'll see, right, this low form here and this one form here, right? Just as there are times when you'll see this low form here and this low form here. Anyways, right? Also, right, we, basically we did expect, right? Not basically, we did expect price to fall lower, right? What were we waiting for here? We were waiting for SMT. 1 second, I think my computer is gonna die. Just saw the screen dim. So I'm gonna plug it in. Sorry about that. Okay. So here, right, this is basic, right? And the highs and lows which we would be focused on would be these. And yes, it's the monthly cycle, right? So it would be this high right here and this high, which would cause the market to, tip per se. And then we had this right here, right? Price failing to break above this high. Then here we had price, overextending from, its high as well. So whenever, right, remember I've said this before, whenever there is, right, there's SMT, which is just regular SMT, right, it can be confirmed by a lower time frame sequential SMT. So basically, if there is a SMT which occurred over a wider range of time, right, this is a lower range of time, right? As you guys can see, if you, count how much candles are here, right, you get more from here to here, and here you'd get less. So this is a lower range of time, right? But this is sequential SMT. This was not, right? So when you see this happen, right, if there is a lower time frame sequential SMT occurring after this, then price would be prone to go lower. And remember, whenever you're looking at the monthly cycle, you need to be using this exact time frame, the 4-hour time frame. It needs a 4-hour close. So once price closed here, right, this one closed here below this close, then we would expect price to go lower, as it did, right? Remember, we expected a reversal here after a sequential SMT, and that's what happened, right? What would, confirm the sequential SMT to close? So once price closed here, it's over, right? And here as well, you have price closing slightly above this side, wick above, that doesn't matter. But, for visual purposes, it's here, right? How we would, we would see price like this, right? Price is closing above here. That's what the algorithm sees. It doesn't really cares about wicks, but, we have to take it into consideration. Just as out here, you have price just wicking, right? Below here, it's just wicks or gaps, right? Wicks, then that's what it is. That's all it is, wicks or gaps. So I hope that you guys, took something from today. That was a lot, right? There was a lot that we spoke about, and everything here is basically, introduction to intermarket sequential SMT and going deeper, into the behavior of the market, right? The algorithmic nature of the market. The real reason why price moves, if you realize we have not been, listen, we haven't been focusing on higher time frame levels. That was literally, and that was just one of the videos where, that was introduction, right? What you need is time and price, right? What you need is time and price. And it's not that it's just, it's just, they're just saying this hindsight. It's not hindsight, right? Right. I would actually love to be, more active, actively posting this about, like, maybe like whenever we get over to WAP, when, people can't just be screenshotting, posting another group, and charging people for, what I've done, right? My work, literally, and this is what it is. And as you guys can see, it works. I don't even have to be up, you guys will literally see it in your charts, you post it in the group, and you're like, is this sequential SMT? Which, yes, it is. And then you get it correct, right? That's how you'll learn. By doing it yourself, going into your charts, taking what I talk about and just applying it to your charts, looking for the things that I say to look for, taking notes, looking for exactly, what I tell you to look for. And I'm saying it again, yes. And that's how you will learn. You will not learn by just watching it once. You need to go into your charts and get some hours in. You need to get some experience in, right? Basically, before NFP, it's NFP, right? I believe so, right? We have, called majority of the range of the market, right? It's Q2. We did expect expansion, as we should expect in Q2. Q2, as I've said, will have, more opportunities, and it's just the beginning. We're just like 3 days in, right? So, and this is one of the lowest probability weeks of the month. It's the first week of the month, which usually has, expansions on, within the first half of the week, the first week of the month. The latter weeks, that's when you get your Thursday reversals, Thursday high of the week, Wednesday high of the week, right? Incredible one shot, one kills. That just seems too good to be true, right? But yes, there will also be a time when, you will make, human errors, because this is actually the market. I don't care what anyone says, right? I don't care what ICT says. Oh, you need to focus on what? Art about, no. We don't even look at that stuff. We realize, just like, once you start looking at it, you realize that, which one works, where does it work, why does it work, why is it even considered to be a order block or whatever it is? Why is a breaker even considered to be a breaker? It's because of SMT. And it's not even just SMT. We go deeper than that. It's because of sequential SMT. We have a lot we know about. And what else? Now you know about intermarket sequential SMT. Right? Now you know about how, each asset can affect the other. Right? Bonds fell here on Monday. Then what happened? We had EU falling Monday, GU falling Monday. That we had the dollar expanding. Do you see that? Right? Bonds fall on Monday. What happened here? The indices, they fell too. Right? So we had a higher time frame sequential SMT here. We had a lower time frame sequential SMT here. That's two stages across two different asset classes. And you're in for a treat. I hope that you guys have a wonderful day. I've been talking for too long. And yeah, we will, probably have not probably, let me promise you. I don't want to make promises, but we'll be here either Friday or Saturday, Q&A, right, where we'll just answer questions that you guys been asking in the questions chat. And then you already know Sunday. So yeah, have a nice day. What did I just say a while ago? Have a nice day, everyone. And I will be in touch with you guys.